This is Trade Flow News, bringing you relevant news and insights from around the world. Trade Flow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Germany triggered the alarm stage of its emergency gas plan on Thursday in response to falling Russian supplies but stopped short of allowing utilities to pass on soaring energy costs to customers in Europe's largest economy. The measure is the latest escalation in a standoff between Europe and Moscow since the Russian invasion of Ukraine that has exposed the bloc's dependence on Russian gas supplies and sparked a frantic search for alternative energy sources. The step is largely symbolic, signaling to companies and households that painful cuts are on the way. But it marks a major shift for Germany, which cultivated strong energy ties with Moscow stretching back to the Cold War.
Oil prices edged higher on Thursday after earlier falls as investors weighed the risks of recession and how fuel demand will be affected by rising interest rates and tight supplies. Brent crude futures rose by 50 cents, or 0.5%, to $112.24 by 13:37 GMT, having dropped to as low as $108.04 earlier in the session. U.S. West Texas Intermediate (WTI) crude futures were up 35 cents, or 0.3%, at $106.54 after touching a session low of $102.32. Both benchmarks plunged 3% on Wednesday and around their lowest since mid-May.
Moving on to the top news in the energy sector.
The German companies that drive Europe's biggest economy are contemplating painful cuts to their output and resorting to polluting forms of energy previously considered unthinkable as they adjust to the prospect of running out of Russian gas. Reduced Russian deliveries have accelerated efforts across German industry to find alternatives to keep factories running and limit the economic cost. Chemical giant BASF is working out which factories could cut output first, and rival Lanxess may delay shutting some coal-fired power plants.
Russia is increasing gasoline and naphtha supplies to Africa and the Middle East as it struggles to sell fuel in Europe, while Asia is already taking bigger volumes of Russian crude, Refinitiv Icon data showed and sources said. The development is likely to increase competition for Asian customers between Russia and other big fuel exporters, Saudi Arabia and the United States, which are the top three suppliers to Asia. The European Union has slowly reduced imports of Russian crude and fuel since March and agreed a full embargo that will take effect by end 2022. Next, we have the top news in metal markets. Britain proposed on Thursday to extend for a further 2 years a package of tariffs and quotas on 5 steel products to protect domestic steelmakers. A year ago, Britain introduced new regulations to protect its steel industry, which employs nearly 34,000 people and generates about $2 billion in turnover each year. Removal of the steel safeguard measure would likely result in an increase in imports and therefore would result in serious injury or the threat of serious injury to UK steel producers, a statement said.
Copper prices fell to a 16-month low on Thursday as fast-rising interest rates and weak economic data fanned fears of a global slowdown that would reduce demand for metals. Benchmark copper on the London Metal Exchange (LME) was down 2% at $8,595 a ton in official trading after touching its lowest since February 2021 at $8,552. Prices are down more than 20% from a record high of $10,845 in March. Recession fears have become heightened, said Wisdom Tree analyst Nitesh Shah. We are seeing a broad-based cyclical sell-off. It's not just copper, not just industrial metals, it's equities markets too.
We will now look at the top news in the agricultural sector.
China's soymeal inventories have tripled in the last 3 months as large volumes of soybeans arrived in the country where demand for the animal feed ingredient is weak, analysts and traders said. The high stocks, combined with a global fall in soybean prices, pushed China's soymeal futures down nearly 6% on Thursday. The most active soybean contract on the Dalian Commodity Exchange closed down 5.5% to 3,891 yuan, $580.59, a ton in the biggest daily decline since February 2013. That is all for today's news on commodity markets. Stay tuned to Trade Flow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.